about what's going on in Bucharest. And yeah, I'm excited.
Yeah, I'm excited too.
The perspective that I'm going to try to bring to the table more is as an independent real estate investor that's looking for opportunities outside of our own development opportunities, and that's a bit of the perspective that I'm going to bring to the table. We do have a significant issue with the budget deficit. So everyone's aware of the fact that our budget deficit is far too high domestically. I believe it's over 8%, which is very high for us. And this is impacting some of the policies that are being put in place, particularly around taxation. And we'll focus on taxation for this discussion. As everyone saw, there was a direct new policy put into place when it comes to VAT.
Okay, yeah.
So in the past, before July 31st, you could buy your first home or your first property with 9% VAT up to a maximum price of 120,000 euros or 600,000 lei equivalent. At that time, everything above 600,000 lei had a VAT rate of 19%. Now, due to the budget deficit and some of the actions that need to be taken to reduce our budget deficit, we now have a 21% flat VAT rate for any real estate that's purchased and assets and products in the market.
So it doesn't matter what my apartment price is.
No.
The VAT is a standard 21%.
Yeah.
So even if I buy a studio, it's 21%.
Yeah.
If I buy a 4-room, 21%.
Yeah, it's 21% flat now. That is obviously not great news for the market. I would say that's probably one of the things that people are listening to this call or this podcast, are thinking about is now, real estate and goods generally are going to cost more for me. So does it make sense to invest now? In terms of that, there's a few things I just want to highlight. Number one, the 9% VAT rate that we were talking about before was an exception. So it was based off of your first acquisition. It was really helpful for first home buyers, particularly anyone that was looking to buy a home in their first property. It was very helpful for that. It was also helpful for investors that were looking to invest before owning a home, that were comfortable with renting and just wanted to start to build an investment portfolio at the beginning. But the reality is that most transactions were already at the 19% rate because that 9% only applied to the first unit. So the perception or the story on the market of VAT has increased dramatically. For some people it has. For most transactions, it's increased by that 2%, from 19 to 21%. An exception-based VAT rate only for one unit.
Oh, okay, only for one unit.
So you could only buy one apartment with 9%.
Okay, yeah.
Everything after that, whether it was 120,000 euros or less, was 19%.
Okay,
so
I see.
that first unit that you bought, that first apartment that you bought, if it was up to 600,000 lei, 120,000 euro equivalent, you can get the 9%. But if you wanted to buy that second unit, even if it was under 600,000 lei, 120,000 euro, you were at the 19% rate.
So it's only for first-time home buyers, essentially. That's the only group that actually benefited from this 9%.
Yeah, 100%.
Okay, yeah.
And for to be direct, for first-time homebuyers, this is a big jump for sure. For the market in its totality, not as dramatic as what I think is being put into the news and publications and stuff like that. For first-time homebuyers, yes, I understand, and this is not great news for those particular personas, for sure. So at the domestic level, we do have this budget deficit, which is impacting the VAT rates. The VAT rates are a concern for sure, but they're less dramatic than what's being perceived today and being publicized today. So that is one of the, I'd say, negative or risks of investing today, is just how does that VAT impact the market and prices and things like that. I don't see how this VAT change could actually impact prices because, going back to 2022, 2023, which were really tough years for real estate because our inflation rate domestically was so high, much higher than it is today. Prices didn't decrease at that time. They just kind of stabilized. There was actually, slight appreciation increase, but generally they were quite stable during peak inflation. And that's also because the interest rates were also at the highest level at that time. But once the inflation rates started to decrease, the interest rates started to decrease, the market appreciated very fast. And when I look at the VAT impact today, I'd say it's less impactful than the inflation rate or the interest rates that we saw then. And there's also some other big supporting facts as to why the VAT change won't have a huge impact, which we'll get into more. So I don't see a huge price change. I see maybe a small reaction or a small reaction in the market when it comes to the number of transactions that are going to be finalized. That's just an opinion based off of my experience and what I've seen in the past. But that is probably one of the risks that people are concerned about overall. The next thing is when it comes to interest rates, though. Which is obviously a huge indicator for real estate performance and for potential growth and appreciation on prices. Interest rates have consistently been decreasing since peak inflation, peak interest rates of 2022. So throughout 2025, they've continued to decrease. If you go for a personal mortgage today, on the market, you will find opportunities to close with fixed terms somewhere in the 5-6% range, which is quite normal for Romania and for Bucharest. So at the domestic level, we have seen interest rates come down consistently, and inflation right now is still high comparative to Europe. So we're over 6% inflation right now, which is high comparative to Europe. But it has also been decreasing since peak inflation, peak interest rates of 2022. So we have the VAT, we have the budget deficit, which is one component of this. How does that impact the market? Risk. That's probably one of the riskier question marks domestically today. And then we have the indicators with the interest rates and with the inflation, which have been decreasing, which are positive indicators in terms of the directional trend of them. They're still high, especially the inflation side, but I also believe that leads to some opportunity. So number of building permits authorized in Bucharest over the past few years. Since 2020, they have decreased by over 33%, the number of authorizations.
So building permits.
The number of building
permits, exactly.
The number of building permits authorized has decreased by 33%. It is projected to continue to decrease unless there's a significant shift in the policy from the Bucharest City Hall. And even more impactful than this is how many meters have been approved. Because if you have a fewer number of authorizations but you have more meters, okay, maybe you don't have much of an issue. But let's talk about the meters. The meters is even more drastic So since 2022, the number of meters that have been authorized have decreased from over 2 million meters in that particular fiscal year
Yeah.
to under 900,000
Wow.
as of
That's
2024.
total built meters, right?
Total approved build meters
Yes.
has decreased by over 50% in the past
Oh my God.
2.5 years,
That's crazy.
which is huge. I mean, that is all part of the indicator and part of the reason why prices have already appreciated. But that continuation of delivered meters and approved meters is going to continue into 2026 and 2027 for certain. There may be a shift in the policy from the Bucharest City Hall to give more building permits for new projects, but the impact of the reduced authorizations, the reduced approved meters has already been baked into the quantity of apartments that will actually be delivered and finalized through 2025, 2026, and 2027.
So it sounds like the prices are going to continue to increase as long as the number of approved building permits remains to not grow.
Yeah, so that's essentially the reality. Even if new building permits are authorized and that number does increase, the fact that there's going to be a significant reduction on delivered apartments during these next coming years being a certainty at this point, prices are projected to continue to increase. And this is not coming from me. This is coming from the National Bank, the BNR. If you follow Christy Popa, respect you a lot if you're happening to see this. He was talking a lot about the crisis. Last year he was talking about the crisis that never came. Because in the market, everyone was thinking, oh, prices will depreciate,
Yeah.
And the reality is that this supply and demand factors, the fact that, interest rates and inflation rates, they're still high, but they're coming down. All these things are pushing pressure on price.
Yeah.
Supply is in essence, supply has been drastically limited while demand continues to rise.
Yeah. And then the cherry on top is taxes have also increased. So
yeah, the taxes, the tax side, I think, has some impact. It will impact, I think, the percentage growth. I think that the measures that have been taken not only were a necessity. So at the European Union level, they were required to take action to reduce our budget deficit.
Yeah.
But to be honest with you, as a real estate developer, even as a real estate developer, I don't want to see prices go up, 50% year over year. I don't want to see these things that happened, let's say from 2003 to 2007 before the financial crisis of 2008.
Yeah.
We want to see growth. I mean, we do have a perspective that we want to see growth in asset prices, but we want to see affordable growth. We want to see prices increase basically in alignment with income increases as much as humanly possible. So even these taxation policies and things like this, which have been put in place, which will definitely impact disposable income to a certain degree, they're not going to lead to a decrease in price, but they'll put a sort of cap or a pressure on how far the prices will increase, which I think is healthy for keeping the market affordable overall.